Hey, this is Brian McDonald.
And Brooke Weathers. We're with the McDonald Weathers team, and we are here to talk to you because we've had so many clients asking us what is going on with the market right now. Where's 2019 headed? We're hearing a lot of kind of scary news in the national news, and we want to show you the difference between the national statistics, what's going on there, and our market here locally.
Yeah, right now we're currently hearing national news that quotes national statistics like growth is going to be slowing, or price appreciation slowing from a pretty torrid pace down to 2.2% in price appreciation nationally over the year. Then also that there's a recession that's going to be coming here in the end of 2019, early 2020. What's that going to look like? What would it do to our home prices?
Should we be buying? Should we be selling?
Yeah, and we want to show you a little data from the past so that you can help compare, well, what would happen today versus what happened during the Great Recession.
Right.
Also, there's a very small number of homes that are available right now in the market. Those are supposed to increase the number of homes available, but not by that much, and how will that make a difference for us?
So on to what happened nationally during the Great Recession. Just want to show you a chart here. Here is real residential property prices for the U.S. So back to 1975, but here is the Great Recession. 2006 prices peaked, and then they crashed in 2008, 2009.
Right, here's that same data. This data, by the way, is from the Federal Reserve Bank, and so it's very reliable data. This is the same data put into a different structure, so it's a home price index. And a lot of people wonder, why do they call it the bubble? So this clearly illustrates the homes prices from the 1980s until 2018. And the peak 2006, and then after that the decrease, and this here is the bubble. Okay, yeah. So and yes, in the US, prices did come down about 27% during that time period. Yeah. So that was very significant. Let's show you some other areas.
Here's Washington. You see the bubble up in 2006, crash in 2008. Miami, same thing, up in 2006, down in 2008. You see the bubble. Phoenix again, big bubble. And Vegas, big bubble, up and then down. This is the Great Recession.
Yeah, this is how it all happened. This is how the graphs all looked for most of the urban areas.
But not us.
Yeah, so let's take a look at what happened here in our local area in Colorado. So in Denver, there was no bubble. The prices were going up, and then they leveled off, and then they went down just a little bit here, and then they continued their rise. So there wasn't that significant bubble in Denver during the Great Recession. And in Boulder, the picture was even better.
Boulder County, this is Boulder County, even a slighter rise, just flattened out during the Great Recession and then kept going.
There was something like a 4.6% price reduction then.
And then here's the city of Boulder. Same thing, just a slight flattening and then raising up.
Now, this is not to say that this is what would happen if another recession occurred, but but nobody's predicting another Great Recession.
You're saying could be a slight recession, not like the Great one. So we're showing you the Great Recession statistics, and here it is in a list format. So this is depreciation. Here was that U.S. average U.S. nationally lost 27.4%. Vegas, we just showed you those charts, 61, big drop. Phoenix, 56, Miami, 51. Those were all big drops. They had big bubbles and they had big losses.
But here in Colorado, we actually did really well. And you can see up at the top, these are all the Colorado areas that there was data available from the Federal Reserve. Yeah. Boulder County and Boulder own less than 5% decreases during the Great Recession. So that goes to show that there is pretty good price rigidity here in the area. And then you can look all the way down.
We are actually in a bubble. We live in a bubble. we were not affected.
You have a different definition for that.
Different definition. We were not affected like the nation was.
Right. And then let's take a look at how long it took to get out of a recession, just to help you look at that data. Here's the same cities, The type of graph that they kind of had. Most of the ones that took the worst hits did have a bubble.
Yeah.
Others had sort of flat graphs like we showed you in Boulder. But the peak year for prices is shown in this column, then the low point or the trough in this column, and then the year at which, or the price recovered to the peak year.
Right.
And the number of years that it took to recover from the low point to the peak price.
So if you bought in the peak year of 2008, paid the highest price, 5 years later is when your price would have been back up to the same price you bought for. Not 20 years, and not like some of these areas we showed you, Vegas, Phoenix, Miami, they still have not recovered to those previous peak prices.
Right.
But we have. We are not the national statistics.
And then where are we going? So here are the 100 largest U.S. metros and what their forecasted price appreciation is going to be for each of the metro areas. We've got them ranked in rank order from 1 to 100, not showing you the middle ones. And look at this, Denver, Aurora, Lakewood, 6.8%, the third ranked metro area in the entire country.
So it's not the 11% to 14% that the area was experiencing 3 years ago, but it's still 6.8.
And it's certainly not the national doom and gloom of 2.2%.
Exactly. Yeah.
So let's also talk about interest rates here. This is the historic interest rates also shown by the Federal Reserve. 30
years. This is a 30-year graph. Okay, 1970, we were down at 7.5. 1980 climbed up to 17.5, and it's been a slow reduction, slow decline way down here. So yes, the news is going, oh, interest rates are rising, but look, this was 2015, here's 18. It's still at a historic low, which means buyers, still a great time to buy a house. If you're thinking about buying, it's still very low, even though, yes, it's going up slightly.
That's right. Don't deny yourself the opportunity to own a home or trade up or trade down just because you're hearing news that says the market might be unstable. Hey, we're coming out of an amazing 3, 4, 5 year stretch, but that doesn't mean we're falling into a chasm.
Right.
We're just settling down a little bit. So make sure that you take advantage of that. And then also for sellers, people are asking, should we sell now or wait? What should happen? Well, if there's going to be a recession in a year, you probably ought to sell before that.
Yeah, to maximize your return on investment.
Yep.
But there's not going to be this big crash.
So, all right, so what does that mean for buyers and sellers?
So that means for buyers, it's still a great time to buy. Interest rates are still at a historic low, but they are slowly climbing, so now is better than later. And prices are still slowly appreciating in the Denver, Boulder area, so better to buy now at a lower price, then they're going to slowly rise.
Yep. And for sellers, we would say, hey, if there is a recession in the near term, and we've already seen several years of high price appreciation, if you're going to sell or move, then take advantage of that now before we hit that time when there's a recession. Hey, so everybody, have a great 2019. If you want any of this data, please contact us. We'll get it to you. And if you have any questions on real estate or would like help buying or selling a house, we'd like to be the first people you call. Have a great year.
Happy New Year.